Hello and welcome to another daily dose of insight powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so it's Macro Monday here at Container Exchange. Let me briefly share my screen to give you a little bit more guidance on what we're talking about today. In general, after sort of a flurry of interest rate decisions last week with the Fed, the Big Bank of Japan, the ECB, this week is a little bit more quiet on that front, with the exception of the Bank of England later this week. But in general, there's lots of PMI and other sort of leading macroeconomic data coming up. So for Monday, for today, that was already released. We saw manufacturing PMI, so Purchasing Manager Index data from China come in, which disappoints. A slight improvement since the last reading, but still below the 50 mark that signals the barrier between contraction and expansion. And what is particularly worrying is that the labor sub-index also remains in contraction territory, so below the 50 mark. And in general, that sort of points to a lack of demand, which leads to pessimism in the industry. And voices are getting louder that call for an increased stimulus or increased support of consumption or exports ex-China to improve sort of the manufacturing industry outlook. And of course, also the prospects for Chinese graduates coming onto the market. Then also today, we have GDP and inflation data coming in from the Eurozone, so the EA. In general, sort of growth reduction is expected from a 1.1 year-on-year reading to a 0.5% year-on-year reading. And that is amidst sort of a cooling inflation figure, still above 5%, but lower than on the last reading. So the interest rate tightenings that we've also seen last week are showing results. And then also later today, the afternoon Euro time zones, we get some data from the US. The Chicago PMI, so again, Purchasing Manager Index, is expected to increase to 43 versus 41.5%. Also here below the 50 mark, but it signals a sentiment turnaround in the US. So we've generally seen data in the US be relatively strong over the past couple of weeks and months, but sentiment continued to trend into more and more negative territory. And this seems to be turning around now. And we see the similar picture, we'll likely see the similar picture on Wednesday with the ISM manufacturing PMI also expected to increase. So these, bear in mind, these are of course forecast figures by experts. And then on Thursday, we have inflation data in Turkey or from Turkey coming in. One of the few countries worldwide that are still seeing significant inflation increases, reading after reading. This time is expected to increase to 47% in Turkish lira inflation, versus a 38% on the previous reading. So stay tuned for what measures will come in there, particularly from the Erdogan government. And then on Thursday as well, the second data point here, the Bank of England is expected to increase interest rates by 25 basis points to 5.25%. So this very much in line with the other central banks that we've seen last week. And then sort of a couple of notable headlines that I read about over the weekend. One, we also discussed it, I think, on Friday already. Box rates on the Transpacific soar amid strict capacity discipline. So carriers blanking of sailings yields results, maybe also in line with disruptions on the west coast of Canada, the ongoing labor disruptions we see in the second headline as well. But there, so we see now Transpacific rates increase the sixth week in a row, and we're now up to 42% above pre-pandemic levels, so the same time 2019. Then sort of we briefly touched upon this already. Western Canada dock workers, the union rejects labor contracts. So this comes in on Saturday. So there was a second sort of deal or tentative deal on the line up for a decision by the union. And again, the union turned this offer down. It would have meant a roughly 20% compound wage increase and a couple of other sort of benefits. So stay tuned what's going to happen there. There's going to be more federal involvement or federal government involvement into the negotiations going forward. And then lastly, very interesting data from the ETF, so exchange traded funds side. There was some data analyzed that showed that investors are really dumping China and China ETF China ETFs are seeing significant money outflows. And where does that money go? Of course, into other emerging markets. And to be honest, I don't think that's a big surprise. If we look at all the discussions that we've seen around, not decoupling from China, but supply chain resilience, China plus one, diversifying supply chains. So all of that, of course, would require heavy investments into other emerging markets in Asia, Southeast Asia, etc., and also India, away from China. And of course, we would expect to see this also on the investor side to happen. Perfect. That's it from us for today. Thanks a lot for tuning in. Have a good, fantastic start into the week, and see you all on Wednesday. Take care.